Welcome to Long-Term Investors Corner. I'm Monica from the president of the Guru Intelligence Network here. And today I'm going to be busting a myth on real estate investments, which are my favorite. I love real estate investing. I've been doing them for couple of decades. But I've made a lot of money in real estate. And actually, it's really easy to make money off real estate. It's not rocket science. But there are some really big mistakes I see a lot of investors do, particularly new investors who are looking to make, I guess, a quick buck on a real estate investment. And so I'm here to bust a myth that is really not true when it comes to investing in real estate. And this is that you only make money in real estate if the price of that real estate goes up. And this is a similar, actually, this is the same myth in the stock market. Everyone thinks that if you buy a piece of real estate or stock and the price goes up, that's where you make your money. And it couldn't be more false, actually. When it comes to real estate, we're looking at the value of that real estate. So as Warren Buffett likes to say, price is what you pay, value is what you get. And in any investment that you do, especially for the long term, you are looking at the value of that investment, not the price. So let's look at a typical real estate deal that I do in the price range that I like to look at. And of course, I'm going to be using some conservative numbers here. I definitely can beat this, and I have beat these numbers before. But as a new person starting out, this might be something you might be looking at. So this is a typical property that we bought for $200,000. It's in a really good location. We know that it's very easy to rent this property, and that's why we purchased it in the location that we did. We put down 20%, which is $40,000. And in this case, I'm going to say we used cash for it. I like to put 20% down to avoid paying the CMHC insurance fees. Also, when you're doing an investment property, most lenders will actually require a minimum of 20%. So you don't have that much choice when it comes to down payment. However, there are other ways to make this property zero down. I'm not going to go over that in this video. So we're just going to be looking at sort of a standard deal here. So in this deal, we take a mortgage of $160,000. And of course, we're going to be holding this property and renting it out. So we've got our monthly expenses. We've got the mortgage, property tax, insurance, maintenance, and anything else that comes up. I kind of lumped it all into maintenance there. And so our total for a monthly expense on this property ranges in around the $1,200 range. Now, we know, we've done our research. We know that we can rent this property easily for $1,250 a month. And so we know we've got a positive cash flow of $50 a month, which isn't much. You can do better, but I'm just using this example to show you that even a small positive cash flow can actually make you lots of money. So here are the numbers. So we hold this property, let's say for 10 years. We will follow what our investment does over 10 years. So in the first year, we have rented the property for $1,250 a month. And so with the positive cash flow, we've actually made an extra cash flow of $600 a month. And for this example, I'm going to pretend that our rent stays the same for the whole 10 years. We haven't increased our rents on our tenant. And we've got a happy tenant. They're happy because we haven't increased their rent. And our tenant is happy. They're paying us $50 a month for the privilege of paying off our mortgage. So at the end of the first year, we actually do pay off the mortgage. We pay off $3,950.84. And if you do the return on investment on that, so our $40,000 investment is what we put in cash, that's 9.8% back of our money already in the first year. So that's pretty good. Given that, most mutual funds make under 5%, you've already doubled that in the first year here. So we continue our investment, and as time goes on, our tenant keeps giving us, $600 a year for the privilege of paying off our mortgage. And as we go over time, we pay off more. And at the end of 10 years, so I used a mortgage calculator to get these numbers. And so after 10 years, we've got $44,453.46 back. And we only put $40,000 into it in the beginning. So what we've ended up is a return on investment with 1,111% in return on investment. So theoretically, if our property hasn't gone up at all, we still have that $40,000. So now we turn that $40,000 into $84,453 in 10 years. And these are conservative numbers. Let me stress, you can do better than this. So what have we learned in this example? Well, we busted our myth. It's not the price at all. We actually didn't even look at the price over the 10 years. We just looked at positive cash flow and having our mortgage paid off. So we made 111% without even looking at the price of the property because we haven't sold it. In fact, long-term investing in real estate is where to go because the longer you hold a piece of real estate, the more money you make off it. So this myth is busted. It's the positive cash flow and mortgage pay down that makes a winner in real estate. So that's the type of thing you are looking at when you go out and buy a property. So hopefully this gives you the tips on how to get out there and make a ton of money in real estate like I have. I hope you really enjoyed this video and you hit that like button, share, and subscribe to this video, to this channel so that you can get more awesome tips on long-term investing. So I hope you have a really good week. Cheers.